If you understand supply and demand trading properly, you can start taking a really high probability trades and build that true consistency while also making money in the Forex market. So in today's video, I'm going to walk you through a supply and demand trading step by step. You will learn what it is, how it forms, and how you can actually use it to build a consistent trading strategy that actually works and deliver results. So before we go any further, I just quickly want to mention this, that supply and demand trading becomes much clearer when you see it used repeatedly in the real market conditions. So that's why I share my trade ideas inside my premium group so people can actually follow along and see how these setups form. And if you want to check them out, you'll find the first link in my description box down below. But anyways, let's just get into the video. So let's actually start with the basics of supply and demand in the Forex market. So supply and demand is pretty much what drives the whole price movement in trading. And when there is a strong buying, you'll see that the price is going higher. And when there is a strong selling, you'll see the price move lower. Now guys, when it comes to supply and demand trading, there is one important thing that you have to understand here. And this isn't about how many traders are buying or selling. What actually matters here is how much buying or selling is taking the place in the market. And because of that, these areas of strong buying or strong selling really tend to stand out on the chart, and the market often reacts to them again in the future. And the actual reason those supply and demand zones matter so much is because those large orders are usually created by big institutions, because they are the ones who have trillions of dollars to place those biggest trades and those large orders in the Forex market, which is why those price levels tend to carry more weight. So when we can recognize where that institutional buying or selling has taken place and align our trades with it rather than fight against it, you can instantly see the difference in the trade outcomes. So to quickly recap, supply refers to a strong selling move in the Forex market where heavy selling comes in and price starts to move lower. On the other hand, demand is the opposite. It's a strong buying move where pressure enters the market and pushes price higher. So I think to fully understand why supply and demand works, it really helps to look at it from a pricing point of view. So this is Euro USD as an example, and we can clearly see where there is a very clear demand area in the Forex market. So in this example, a clear demand level would be from this price point to this price level over here. So this price range simply represents a level where buyers were previously comfortable buying euro against the US dollar. The market accepted this price before, which is why it stands out as an important area on the chart. And because this was a price that buyers were happy to step in the past, there is a good chance that if price returns to this level in the future, the buyers might be interested in it again. And the good news for us as the traders, this simply creates a potential trading opportunity, which means when the price pulls back into this zone that we have marked, we can start looking for buying opportunities at what we would consider a cheaper or let's say better price level rather than, kind of chasing the price after it has already moved. So this range at the base of a strong buying move is what we call a demand zone. Usually you will see a strong buying pressure like this with this momentum candlestick. You will see some sort of consolidation, and then you will see another strong push towards the upside. So this simple consolidation is what creates our demand zone. And on the sell side, the same idea applies, which means when we see a strong selling move, this price range at the top of that move becomes a supply zone. And this is pretty much an area where sellers were previously comfortable selling at this price level, and they may step in again if the price returns to this level in the future. So the goal with supply and demand trading is pretty simple. You have to identify these zones, wait for the price to come back into them, and then look for trading opportunities from these levels that already made sense in the market. Now let me actually show you how to mark supply and demand zones on your trading chart. So there's actually a common rule in trading that says in order to mark your your demand zone, you have to use the last bearish candlestick before that strong bullish move up. And to mark a supply zone, using the last bullish candlestick before a strong move down. And that approach works, and if you apply consistently, you can still get a pretty good results. But personally though, I don't follow that rule exactly. So what I do, instead of marking a single candlestick, I simply focus on the price clusters. That's what I like to call them. So rather than looking for that one exact candlestick, I just look at the group of candles where price pauses, or let's say consolidates, and then makes a strong move away. So in this example, as you can see, we get a strong bullish candle, then a small cluster of candles where the price kind of slows down, and then another strong bullish candle that drives price higher. So this cluster in the middle is the area that I'm interested in, and this would be my demand zone. And the reason why I mark my demand zones this way is very simple, because large institutions don't usually enter the market at one exact price level. They actually build positions over a range while the price is consolidating. So that's why marking the zone the way I mark as a cluster just gives a more realistic area to work and trade with. And on the supply side, it works the exact same way. So instead of looking for a bullish impulse, we are looking for a strong selling move, just like this one over here. And just before that move, the price usually pauses and forms a small cluster of candles, which in this case would be this supply level that I'm interested in. So just like with the demand, I would treat supply as a price range, not a single candle. And I'm not saying that this approach is right and the standard method is wrong. Trading is personal, so both of these variations can work, but this is just a method I have been using because it produces more consistent results and gives me those high probability trades that I want to trade with. So in my opinion, the most important thing that supply and demand zones should be treated as an area, not the exact price points. So I think by now you can see how supply and demand trading actually works in the real market conditions, and some zones will get a very clean pullback, the price comes back into the area, and you will be able to take a trade. But the reality of trading is that other zones that you may mark on your chart won't get retested at all. So for example here, as you can see, we have a very clean supply level over here, but the price never actually came back into it before continuing lower. And if you were waiting for that retest, you simply wouldn't have been in the move, and this is just how probabilities work in trading. Not every single supply and demand zone will give you an entry, and that's completely normal because the goal isn't to catch every single move. The goal is to be ready when the price does return to your zones, and this is what gives you an opportunity to trade from the level that has been already made sense into the market and institutions have been watching it. Now guys, one really important thing that you may notice from all of these examples that I have shown you so far is that we are trading with the trend. And this is something that you have to understand if you want supply and demand to actually work, because supply and demand zones, they form all over the charts and on all time frames, but not all of them are actually worth taking. Because if you try to trade supply and demand zone without paying attention to the trend direction, you are going to struggle, because you might find yourself buying into demand zones that keeps breaking because it's been tested many times, or selling into supply zones that keep breaking through. So this is something that you have to be very careful about. So let's actually take a look at this example and you will see exactly what I mean. So as you can see in this example, the market is clearly in a downtrend. We broke in structure to the downside and the price is making lower lows and lower highs. And because of that, the only thing we want to focus on in this market is selling from supply zones. And we really don't want to pay any attention to demand zones in a downtrend unless they are being used as a profit targets. So even though they will form, buying from them means you are fighting the direction of the market and the overall market structure, and that usually leads to getting stopped out repeatedly. And the exact same logic applies in an uptrend, which means if the market is trending higher and the structure is being broken to the upside with the higher highs and higher lows, then our only focus is on buying from the demand zones, we don't want to sell from a supply zones in an uptrend because the price will continue pushing higher and take us out. So this is the rule that you have to follow no matter what. In an uptrend, we only look for demand zones to buy from. In a downtrend, we only look for supply zones to sell from. And if you follow this rule and stop trying to fight the market direction, supply and demand becomes so much consistent and so much easier to trade. Okay, so now what we are going to do is to take a look at a couple of trade examples, and I will show you how to put supply and demand trading together with a market structure to catch those consistent trades that we all want. So this is CAD JPY on the daily time frame, and the first thing we can see is that the market is forming those higher highs and higher lows, which tells us that the price is trending bullish. So the next thing we can notice is this huge momentum candlestick, right? So before that move, we can see that the price was clustering or consolidating, which actually forms our demand zone. And this basically tells us that this zone where heavy buying interest was at, so this is what makes a valid demand zone. So now that we have our demand zone marked, as I said before, we do not chase the price. We're definitely not entering on this bullish momentum candlestick. We are waiting for the price to come back into the zone. Once the price reacts to the demand zone, we are going to enter our trade. Our stop loss would be below the zone where the buying idea would be simply invalidated. So it could be just below that. And then of course, we want to target higher. So maybe for the next target zone, you can scroll back and see when there is a supply level at the top. So for example, over here, as we can see, we have this momentum candlestick towards the downside, a cluster going on right here, and then another bearish candlestick. So this would be our supply zone that we could potentially target for our profit. And now that I actually look at the supply zone, this is a very strong one for one simple reason. This level was never tested before. So it's very logical that if the price continues trending higher, we're gonna see a very strong selling pressure from this level. And I actually mentioned this in my previous video that when it comes to take profit targets and your profits, make sure that you set them where it's most logical and you take that money home, because the market is unpredictable and one moment it can go higher, another moment it can reverse. So take that money home. So even in this CAD JPY example, we can actually notice some sort of supply level over here, as you can see. So even here, you could potentially take maybe a partial profit if you wish to, or if you want to keep your full position running, you are maybe setting yourself for a whopping 463 pips in a profit. So as you can see, the trade just moves beautifully towards the upside from that demand zone, and it actually reacts to the supply zone that we have marked. This is where the trade could have been a massive one. And as you can see, even the risk reward ratio is not that bad, 3.29. And I think this is a brilliant example of how you can utilize demand zone to trade from. You target the next supply zone, combining with the overall market structure and direction. So now that you have seen a buy example from a demand zone, let's actually flip this around and take a look at the sell side example using supply level. So this is CAD Swiss on the 4-hour time frame. So looking at this chart, we are seeing those beautiful lows and lower highs being formed, which means we are in a downtrend, which means what we are doing? Selling from supply. That's correct. So as you can see, the price previously sold off strongly from this area, and this sharp move down, this is what tells us that sellers were very active at this level, which is what actually creates our supply level. As you can see, cluster, this is what we want to see before that sharp move down. So now, as I said, we do not chase the price at all. We are waiting for the price to come back into our supply zone so we can actually trade it. And as you can see in this example, it's a bit different because in the previous one, the price reacted to the demand zone but never kind of went inside it. And in this one, as you can see, the whole price action is inside the supply zone, which means you can get even a better entry price because, well, the price never actually closed above the supply zone, which would of course invalidate it. But in this case, you would get even a better risk to reward ratio as well. And simply because the price still closed inside that supply level, we just simply know that, well, sorry buyers, you are not strong enough to push the price higher, and this is where we can take our trade. So when it comes to the stop losses, once again, you can place above the supply level. That would simply just invalidate the whole trading idea. And then of course you can look at the higher time frames for potential targets, but even over here, as I said, you can use demand or supply zones for your take profit targets. So this wood cluster over here would be just a simple demand zone that I would mark, and I can easily aim for that level, which in this case would give a very nice 2.94 risk to reward ratio. And as you can see, clean rejection from the supply level, which leads to a very beautiful profits. So the actual reason I showed you two trades, one on the daily time frame and another one on the 4-hour chart, is to tell you that supply and demand trading works on any time frame. The same reactions you see here will also show up on the smaller time frames, on the higher time frames as well. The only difference is that how fast price moves. So if you're a scalper or a day trader watching this right now, you might use the supply and demand trading concept maybe on a 1 hour, 15-minute, 5-minute or 1-minute charts. It's really up to you. And if you are more of a swing trader like myself, you can easily apply the exact same idea, the same supply and demand trading concept maybe on the 4-hour or daily charts. And that actually, guys, brings us to the end of this supply and demand trading guide. At this point, the most important thing that you can actually do is to jump on the charts and test this yourself. What you can do, mark the zones, watch how the price reacts in the market, and start building the confidence with how supply and demand actually plays out in the real market conditions. And I'm not gonna sugarcoat it, but it does take time to get good at it. But if you keep on practicing and remember to trade with the trend and the overall market structure, trust me, supply and demand trading becomes so much easier. And if you enjoyed watching this video, I think you're gonna like watching this one right over here. So make sure you click on that to watch it next. If you want to join my VIP trading group, because we're literally dominating the Forex markets, you will find the first link in my description box down below. And as always, thank you very much for watching, and I will catch you in the next one. Bye!